Good morning, and thanks for watching the Market Day Report. I'm Janet Adkison. It's time to zero in on your marketing plans. That's as crop insurance prices are set today. Every year, USDA's Risk Management Agency recalibrates crop revenue protection insurance policies to reflect updated market expectations. So joining us now is AFBF Market Intelligence Director John Newton. John, thanks for joining us once again. So where are the crop insurance levels set for the growing season? And of course, how are those determined as well?
Well, so the Risk Management Agency surveys during the month of February new crop prices. So the crop insurance prices are the average for the entire month of February for the new crop corn, new crop soybean, new crop cotton, and new crop sorghum policies. And so what we saw based on that month-long survey period, the crop insurance spring price for corn is $3.96, which is unchanged from last year. Soybeans are coming in at $10.16. Down about 3 cents from last year. And then cotton came in at 76 cents per pound, up a little bit from the spring price we saw last year, and the highest spring cotton price that we've seen since 2011.
And John, how does that compare to the farmers' break-evens?
Well, it's quite frankly, it's going to be pretty tough. Some farmers most likely can break even at some of these prices, but there are a lot of farmers who don't have the economies of scale and are some of the high-cost producers where these prices may not be break even. Then they also need to consider their basis risk. So part of a sound risk management strategy is understanding your prices and understanding your basis.
So what do farmers need to consider now, of course, when they're marketing those crops?
Well, I think one of the things that the trade's really looking at now is what this may have, what the implications are going to be on planting. Generally, when we look at that new crop spring soybean to corn price ratio, when it's above that 2.5 level that we see today, 2.56 is what we see today. When it's above that level, we usually see more soybean acres and fewer corn acres. And USDA actually came out at the Ag Outlook Conference last week where I joined you guys and had soybean and corn acres both declining in 2018. So it really goes against what the historical trends would suggest, and that is that we see even more soybean acres in 2018. So there's a whole lot of uncertainty going into that March 29th prospective plannings report.
And of course, John, what actually happens though in the event of a crop loss?
Well, in the event of a crop loss for growers that have a harvest price option, their crop insurance price is going to be based on the higher of that spring price or that harvest price that we discover later in the year. So for folks that have a harvest price option, the spring price that we saw today is only one component of the ultimate revenue guarantee in the event of a crop loss.
And any implications for the 2018 plantings as well?
Well, like I said, I think there's a lot of uncertainty now, given that the spring soybean to corn price ratio is as high as it is, and yet USDA is projecting for acreage on both of those to come down. So something's got to give. Either the models are wrong or the USDA forecast is wrong, and we'll see that in the prospective plannings and ultimately the actual acreage report that we see in June of 18.
All right. Well, John, thank you for joining us once again. AFBF Market Intelligence Director John Newton.